Okay, so this is a quick video introduction to day trading. I had a request in the comments um, for some insight on that. Of course, this is Foster Enterprise Investment Group. And so the first thing you want to do when day trading is develop a business plan, okay? So just like with any business, you want to establish what your goals are, what your objectives are, long term and short term, okay? Um, you're gonna use the equipment that you're gonna use. Okay, you're gonna need a trading station. You're gonna need internet. You're gonna use a cell phone, tablet, or just a regular computer with high speed internet. Because stocks they change by the milliseconds. They change instantly, constantly, and you need to be able to get in on a trade and get out with no lag in order to maximize your profits. Um, You want to have your short term, long term goals, and you need to set a budget. Okay, you need to establish. Okay, how much can I devote to this, and also how much am I willing to lose? Because losses will come, and these are examples of some trading stations. Okay, this is a simple one external monitor. It probably costs this monitor costs like $20 at the thrift store. Not the thrift store, the pawn shop. And this is basically how mine is. I use my cell phone, my tablet, my computer, and an external monitor, just to be able to constantly like look at everything. Similar to what this is down here, they have 6 monitors and they have, five stocks there, three here, something over here, and just different moving averages and things going on there. You don't actually need this. You'll be okay with this. You don't need this. You could just use your cell phone by itself and you'll be good to go. All right. So one thing you want to do is you want to create a trading plan. Okay. You want to identify the stocks that you're interested in, whether it be the Apple, or whether it be the Burger King, or whether it be the FedEx. You want to identify the stocks that you want to trade, and you need to know what kind of range you're looking into. Are you looking at penny stocks? Are you looking at things that are worth, a tenth of a penny? Or are you looking at things that are worth between $5 and $25? Things that are worth $300? Things that are in the range of, blue chips that are like $1,000 to $2,000 a share. And you need to know: are you looking for tiny movements? Which is basically what day trading is all about. Going from buying in here and selling here, 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 and where I've been there. So the difference between that day trading and just regular buying and selling stocks or trading stocks is some people they'll buy in here, and because like let's just say this is over the span of, and I think it is over the span of months. I think it says January, well, at the end of December to February. So that normal trading they expect you to hold long term. So let's just say this was a span over a year or two. Over a year or two, yeah, the stock's gonna consistently, probably perform and go up. Um, so but day trading is completely different. Day trading is like let's just say this was an hourly chart or a minute chart, and this is what it's constantly doing throughout the day. We're buying in here and we're selling here or here. We're selling at the top and we're waiting for it to fall and we buy back in. And when it moves here, we're selling. That's what day trading is all about. That's how you get your maximum profits. Well, that's not how you maximize profit, but that's how you get your quick profits and you move on to your next stock, your next victim, basically. Um, Another strategy, this tiny movement. Another strategy is this is Amazon here, and you could wait for these earnings calls to come out because multiple come out each day, and hope, well, not hope, but with your strategy of knowing what's a good stock from your research, know that it's gonna shoot up and it's gonna be significant. And I was in this stock when it did this, and it shot up. I want to say it was 7%. I'm not sure. Anyway, it went from I think around 14 something 100 a share to 16.26 a share. I think I said in my last video. And so that's just a strategy I use. But I also use one of these strategies where I wait for a dip and buy in and then sell once it makes a move. I don't wait for it to make um, major 5%, 10% moves. I get the quick profit. It might be $25. It might be $600. Like I'm not gonna wait and say, oh, I think it might go higher. I've made the money I wanted to make, and I'm gonna go. That's why you have to have a strategy or plan. You got to know. There it is next. Your exit strategy. How you know when it's time to close out of position. Me personally, it kind of varies by stock and how much I'm putting into it. But I say, if I make 1% on that stock, then I know I'm good enough to get out. It's different for me because I'm getting larger quantities of shares than the average trader might be. So 1% for me is nowhere near the same as 1% for you. But I'm happy with a 1% move because 1% for me might be $1,000. While 1% for you could be if you're if you're only trading around $500, then that 1% might be just that $5 for you. And of course, you're gonna want to, have something more, 5, 10%. But the thing about day trading is you're going for quick gains that you're gonna be able to continue to do throughout the day. That's just one trade. A trade could take seconds or minutes. It's not an all day thing. So if I can get in, or if you can get in and make $20 and 5 minutes of buying a share and you sell it, I mean, how much do you make an hour? So you just made that in a minute. For me, I'm like, okay, I just made $400. It's been 3 minutes. I'm selling and finding another stock to get into. So know your exit strategy, okay? All right. So anticipate losses because nobody's perfect. It's not some kind of concrete strategy to knowing what is going to happen, when and where. So at some point in time, it's going to happen. You're going to buy something. It's going to go down. You just got to not panic and just say, okay, hey, it's a loss. Well, some people say it's never a loss until you actually sell. So, you can hold and wait for the way to ride back up and then sell off at a profit. That's why I said I've never sold at a loss because I have no problem waiting it out. And I give you another example. I did buy something and then the entire market just kind of crashed. And I mean, I had to wait a month and a half before it to recover. But when it did recover, I gained extra $3,000 from the growth, even though initially I took a big hit because I think I lost about 20% of what I put into it. But I waited, and I waited. But some people wait longer than that. But a month and a half, almost 2 months later, it came roaring back, and I sold. And that's just the whenever I've got into something like that, I anticipate those losses, so it never affects me that bad because I know it can happen. And for me, losses are just losses out of profits. It's never out of my own money because I built up so much from trading. So practice trading, big deal. You should always practice. That's how you get good at what you do. If you don't know what you're doing, you're just not really understanding. Watch the market. Get you one of those apps for pretend trading, and say, you know what, this is where I want to buy in, and then whenever say this is what I want to sell, and see what happens. See if it goes up, see if it goes down. Get good and proficient at that, and then use your actual real money. You want to stick to your trading strategy, okay? So don't get caught up in your emotions. So if you just put $500 into account and it goes down to $200, you just lost $300. It's quick. It's easy to get caught up in feeling emotional about that loss. Even if it's just $20, you might feel emotional about it. But what people do is they try to like make up for that. They just like, okay, I just lost $100. Let me make a whole bunch of more trades. When the market's obviously bad and down, and they want to keep making more and more trades, impulse trades or selling, and they're just gonna lose more and more money. Not always, but a lot of times that's what's going to happen because you're not thinking rationally. You're just trying to recover what you already lost. And sometimes you just got to know, hey, let me just stop, and come back to it tomorrow. And it'll be a whole new market. Impulse selling, when things go down, like the Dow drop, you can lose $20,000 because the whole market just crashed, right? And you're like, oh my God, I'm losing everything. And then you just sell. And now you sold it and now it's actually gone. Instead of waiting for the market to recover, because the one thing about stock market, you watch it, it's up and down, up and down, up and down. It might go down here, but at some point it's got to hit this, kind of like this glass ceiling at the bottom. I can't think of what you call it, but it's going to hit the floor. It's not going to go any lower than a certain price. You will never see, I'm not gonna say never, but I don't expect to see Netflix. I think it's at $325 a share right now, right? It's not gonna go to $100 a share. It's not gonna hit zero. It might go down a little bit, but it's gonna go back up. You just have to keep that in mind. Recall that you put a great effort into crafting your trading strategy that has demonstrated a history of success. Stick to that strategy, leave emotions at the process. All right, stay on top of the news. CNN, Yahoo Finance, CNBC. You want to watch these because what goes on in the news is going to give you a heads up when things start to change with the stocks. So, for example, T-Mobile and Sprint's merger, they have tried multiple mergers, right? It never goes through. So when they announce this, attempt to merge, usually a merger would cause a price to rise, right? But you know that they haven't had a lot of success with mergers because the FCC and other things that's been stopping them. So, if you were in, you would want to get out because it's going to go down because that's just them trying something that's not going to work again. Not saying that's not going to work, but that's just how people are going to look at it and think it's going to happen. So, or, if you had something like CEO did something, some Johnson Johnson's getting sued, excuse me, you would know to say, hey, oh, something's happening, or something good came out, hey, new drug trial on some kind of biopharmaceutical company has been approved, and they're going to start production. So, you had to look out for things in the news. When you're trading, you'll see like little links that's been recently, you should see recently linked articles. All right. You want to perform a trading analysis. After trading is over, you want to look back and say, hey, this is what I did right. This is what I did wrong. Trading journal. I don't do this, but I know I can look at my trading, my brokers. They have a log of everything that I've done, and I can just compile that at the end of each year and say, okay, this is everything that I've done. All right. You want to adapt your strategy to the market, okay? The market is going to change, technology change, a lot of things are going to change, and you have to be able to change with it. Not saying change your strategy completely up because things didn't work out once or twice, but evolve and adapt. And take out hope. Hope is not a trading strategy, okay? I want to say it earlier. I hope that this goes up. I hope this happens. Hope that happens. You can't build your strategy on hope. It's just not going to work. You have to have like concrete evidence-based practice. All right. So this is my Facebook investment group. And I only have 15 minutes. That's why I'm kind of going to rush. Like this video thing, when I'm sharing my video, it only allows you to do it for 15 minutes. But this is my Facebook investment group where I post like things that are informative. Hey, this is how you do taxes. This is how you whatever. It's teaching you about saving, learning, and investing. So go follow, like, share that. And then if you want a free share stock, I use Robinhood. The link is there. It should be pinned at the top. You can go there and get a free share. It might be Amazon, Apple, or Ford, or some other companies. YouTube, Elijah Foster, Trading Bet on Twitter, and Foster Enterprise Investment Group on Facebook. Like, share, subscribe, all those good things. Help you save money. Everything's free. I'm just promoting, financial literacy here. So That's it. I'm at 15 minutes.